Okay, hello everybody. This is Dr. G coming at you on Sunday, August 23rd of 2026. I had Wes in the group, who is a former student of ours and up in Alaska, doing well. He's asking about order blocks. You hear that terminology. A lot of the times you hear this terminology of order block from ICT traders. I give not a ton of heed to anything that ICT does or says. What he's done is um, he's taken normal theories of the market and rebranded them as his own, and then made a lore about how the algorithm he created is controlling the whole universe and everything. And the human mind is such that it loves a good conspiracy, and so he's got a lot of followers. But I don't know very many people that actually have had a whole lot of success with ICT concepts. I didn't even know why we call them ICT concepts. A lot of things he does is, like, for example, his the one that I've found that's useful is the silver bullet, where we have a sharp move down and it comes back up into encroachment into some of the candles, and then it comes back down. Basically, that's just a Fibonacci sequence. And the reason why these Fibonacci sequences happen is because the market wants efficiency. If we have a move that moves down in what they call a fair value gap, there are orders still left on the table. Um, as price moves there, and not all the orders got filled, and so they're still sitting there. And so when it comes back up to halfway or wherever the encroachment is, it hits those orders, and those orders activate, and it sends it down again. Um, he's branded it as his own special, theories, but these theories have been around forever. I wouldn't listen much to anything that ICT says at all. I mean, seriously. People wait around for these setups to happen, and then once in every couple of days happens, and trading is much simpler than that. Okay, so what we're really talking about, now that I've finished my rant, is an order block. He uses these order blocks. He sometimes call them PD arrays. I wouldn't pay much attention to that. Order blocks are actual things that happen. Basically, are areas at a significant level where significant orders have been made. We've got a change of direction, and we've got the players that are defending that area. And so there's several things that we have to take a look at. For example, a bullish order block, price moves down, or actually it can move up as well. Price moves a certain direction and then it pauses. It'll take several consolidation moves and then continues on, or reverses the other way. Depends on what you want to look. Basically, it's not someplace where order blocks are not someplace where you want to uh, reverse or continue. It's a place to pay attention. Okay. So what I have on here is a couple of days the other uh, that we've had a couple days ago. It, uh, Actually, Friday's move is the best one, but this is Tuesday, I believe. Price moves down, and it goes past, it sweeps a consolidation area, it sweeps an area of interest. Right here we have a low, comes back up, hits the New York VWAP. My pink one's the New York VWAP. My blue one is something I put on just recently, which is the London Open VWAP, and then I'm going to stop it right at London close. Anyway, we've got a sweep, we've got a consolidation where a lot of orders have come in. And if you have something like Bookmap or something like that, you can see these orders coming in, the volume coming in. And so you've got big orders. You've got a lift up, and then this is not a very good one. This is supposed to sweep an area high. So this is not a very good example, but we'll come back to it. And then it comes back down, and when it hits this area right here, so basically a lot of people take the last block before it reverses up. So it would be this one right here. Okay, we're going to take that last red candle that before it started moving up. We're going to stretch it out, and it hits these areas, and that's being defended. So this right here would be considered an order block. However, there's some rules that I like to follow before I even do it, and I've got it right here. Number one, it's got to have a strong departure from the place where you took off from. So when we're taking over here, this is kind of mediocre. Again, this is not the best example. We'll go to a better example in just a minute. But it did take off. If you were in a trade, that would certainly be a strong movement coming up. That's actually hitting a Fibonacci, a small one to start off with. Right to the 50%. You could go to a high to high, but that's a different day. Anyway, we could take that and send it out. And these orders right here, there's still some buy orders that are right here, or people that have gotten in here. They come above, they hit this, they get into their entry point, and they add, and it takes off again. Okay, so number one, we have to have a strong departure, price moving quickly, and we don't want a whole lot of overlap. Okay, we don't want a whole lot of consolidation right through here. We want to just take off. Same thing here. We don't want a whole lot of overlap like we had over here. This is too much overlap. The reason why is all these orders right through here have been mitigated. Okay, they've been through, they've been up, they've been through, and we have the players that have pretty much got their fills and moved on. However, right here, this has moved up so sharply that when it comes back again, we still have orders down there. Number one, we have orders that are not filled, and they're going to get filled. Two, we have people that want to add right here at their point of entry back here. And then number three, we have people that got in right here that are defending this position right here. Okay, so that's an example of an order block, is right here where there's lots of orders that are consolidated right there. Okay, okay, going back to the rules, we need a structure break. Now we can say right here that we didn't break the structure. We did break this structure going down, but we would typically want a structure that broke above here and come back down. The reason why is this shows that that there are willing buyers up here. Okay, when it comes back down and hits, there's a much higher chance of this coming back up if this broke structure, and there's some acceptance up here with any buyers, and obviously it's true if we're going down. Okay, all right, three, we want it to leave some fair value gaps. We don't want that overlap. Okay, we don't want that overlap. Here is a really good example of one right here. Okay, now this isn't your typical one because a lot of people take a look at the swing low and the swing high. This particular order block happened right here in the middle. This is a continuation example right here. If we were looking for something right here, and again, I'm on the 5 minute, I'm going to go to the 2 minute and get a little bit more granular. We've swept here, which is good. We've come back up and we're taking off. Now, some people would call the last move down maybe right here, the order block, because this is the last move down over here. And so when this comes back down, never did come down on this day. In fact, some people probably lost their shirts on this, because look what happens here. What would you think that would happen? Well, we're coming down here, didn't hit the 23. We're going to come back down here, and we want this to come up and hit the 50% and come back down, hit that order block at least one more time and went up. But there was some movement right through here and this right here is considered an order block too. Okay, so let's talk about this order block. This has come up, it's moved sharply, it's come down, and we've got some resistance right here at the New York the London VWAP. Okay, so London ends right here. So we got people going, okay, it's going to hit that London, come back down. Not only that, it's going to hit this Fibonacci. We could pull this down here and see if that fits a little better. and they're thinking, yeah, okay, maybe we got some sellers coming in right through here. Probably some people went short. It's a good example of a squeeze right through here where all these stop losses got hit about right here. However, we can take a look and see that there is this block right through here is a place where there was some resistance, and when it came back up, so let's throw this out through about through here. Okay, and I'm going to narrow that down to this red candle right through here, even though that's not a ton. Okay, and then here's your sharp move up. Remember, we've got departure may leave fair value gaps and thinly traded areas. That's what this one did right through here. If we went out to the 5-minute, we could certainly see that there are 3 value gaps. One here, this one's mitigated, but this one is still here to the start right here. Okay, so we've got that one checked off. So strong departure, yep. Structure break, yep. Here's your structure break right through here. We got this coming down right through here, and we are now above this structure is what I would go for, or even this one. But also, you're taking a look at it barely hit the IB right through here, and that's a good way to send that down too. This is not what we're looking for right here. We're just looking for the strips. It would have been better if it broke this structure right here, but that IB is probably close enough for me. Okay, price has not repeatedly turned to this block, so it's not bouncing 1, 2, 3, 4 down through here. We want a hit, and we want to catch all of these orders that are being defended and orders that are left and send it back up. So it never made it back to this order block, but it did make it back to this mid level. Okay, now there's a lot of things that would make me go long right through here. Number one, it's coming close to the New York VWAP and going back up. Number two, it's got this block right through here. Okay, the third thing is that it's this part right through here is a halfway point, and you learn to recognize these, that oftentimes when you have a move all the way up here, the halfway spot is where a lot of orders happen, and you're looking for it to bounce off of that as well. Also, if you've got an order block and this moves straight up, you might even take the short down here, and there's your target right through here. This would have been a bumpy road for quite a few hours, but it hit it and moved up. And if it came back down here to the 50, obviously it's a Fibonacci. The order block, the VWAP, everything lines up. This was an easy call going back up. Okay, and finally, it agrees with a higher time frame session, and the VWAP. I'm not sure where the VWAP was over here. If we started it out, let's put one right here. New York Open, let's put one wherever that is, 18. Something like that. That's going to be your Globex, and your Globex is going to agree. Comes back up, hits the Globex, hits New York, bounces up. There's your other point that determines you want to go for a long here. Okay. You want to again, there's several things that can happen. It could hit it and bounce. It could hit it strongly and bounce. It can ease its way through, or it can completely run stop sign and come back and retest. It's not one of those things where you say, okay, I have to take this and go down. But what you have to take a look at is the context of what's happening on your chart. If it runs the stop sign, comes back and retests and goes the other way, you know that order block's been mitigated, and you've got sellers coming back in that are taking control. And so you could take advantage of the short right there. Okay, so you got all the the contexts that are available. So just be careful about which one you do. Okay. With that, I think we're done here. I hope you got some value out of it, and we'll talk to you later. Bye bye.